Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that's less edge of your seat thriller and more slow burn drama from Pinnacle Financial Partners. Let's see if we can uncover anything exciting or if it's just another quarter of financial humdrum. Pinnacle Financial just dropped their financial report and here's the headline. They made a cool $140 million in profit. Sounds good, right? But is it really good or is there something lurking beneath the surface? We'll break down the numbers, see where they're making money and what could throw a wrench in their plans. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for even deeper discussions. We'll break down the numbers, see where they're making money and what could throw a wrench in their plans. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for even deeper discussions. Alright, let's jump right into it. You know what this is, the table of contents, your entry point into financial information, so let's get right past this. First, a quick peek at the balance sheet, which is like a snapshot of the company's assets and debts. One key number, total assets reached $54.3 billion. That's up from $52.6 billion at the end of last year. It seems like a big increase, but remember to compare this growth with growth in liabilities, what they owe. Now let's head to the statement of shareholders' equity. This tells us about how the money and value is allocated. We can see that there was preferred stock worth $217 million unchanged, common stock $77 million unchanged, common stock $77 million additional paid in capital, and the retained earnings are over $3 billion on here. Let's get to everyone's favorite part, the income statement. This tells us how much money the company brought in and how much they spent. Net income was $140.4 million. Now, earnings per share, that is, profit divided by the number of shares, was 1.77. That's up from 1.57 last year, which sounds like things are heading in the right direction. But here's the thing, they set aside almost $17 million for potentially bad loans. This means people might not be paying back what they borrowed. It's important to watch this number because if it keeps growing, it could signal trouble. Now let's compare the interest and non-interest pieces. Net interest income, basically profit from loans, was $364.4 million, up from $315 million. That's great. But the flip side, non-interest income, fees, commissions, etc., dropped to $98.4 million. Why? Mostly from lower gains on selling mortgage loans. Alright, let's pause on the main numbers for a sec and talk about the stuff behind the scenes. It had something called other comprehensive income, which is a gain or loss. Basically, it relates to changes in the value of their investments. That gain was $1.878 million, quite tiny. So with all these numbers, where are we at? Net income available to common shareholders was $136 million compared to $1,220 million a year before. Things are looking positive for shareholders. We have seen increases in income and EPS. Now let's talk cash. It's the lifeblood of any business. Net cash used in operating activities was actually negative, minus $21.7 million. That's not ideal, but there is a positive explanation. Cash was used in investing activities of over $1 billion, but it was offset by $1.6 billion. We'll need to keep an eye on their investing decisions. Time to turn this around, equity method investment. So the bank has a significant stake in a company called Bankers Healthcare Group or Bankers Healthcare Group or BHG. It is a commercial loan provider to healthcare providers. They own 49% of it. It's worth $43.2 million. They got dividends of $24 million. A snapshot of BHG reveals that for a bank, it's a decent chunk of Pinnacle's profit. BHG's net income increased up to $44 million versus last year, $32 million. Onto the securities. These are a mix of government bonds, mortgage-backed securities, and other investments that Pinnacle holds to make money and manage risk. Overall, their securities portfolio is massive, several billions of dollars. Level 3 assets, those with least transparent values, are small at the start of March, close to $0 value. That's always good to see that the management isn't using questionable or hard to see evaluations to hide assets and debts. Now for the concerning point, losses, unrealized losses in available for sale securities. A loss of nearly $223 million, but all good. But what does it really mean? Why did this happen? The unrealized losses are from changes in interest rates and not the securities' credit quality. The question you need to consider is, what if they needed to sell these securities? For the investment activities, they decreased purchase agreements to resell by a little, as well as decrease loans, but also increase proceeds, not a cause for concern. Let's look at the bread and butter of banks' loans. Pinnacle's loan portfolio is pretty diverse, from real estate to commercial ventures and even loans to individuals. Most of these loans by the numbers are commercial and industrial, with the real estate coming next. We have roughly $36.1 billion, net of a $417 million allowance for credit losses, ACL. Here are our loan risk ratings. Pass is what you want to see. Most of the loans seem to be in this rating, 792 millions. Loans that have potential weaknesses are in special mention, just under $80 million. We want to see these numbers not increase. Here we have the loan loss provisioning. We can see the provision is 0, as it should be. The allowance coverage ratio, that's how much money they have set aside as a percentage of those riskier loans, substandard and special mention, is pretty high. This is an insurance against future losses. All things looking pretty solid and healthy in the provisioning for loan losses. I bet you skipped past that heading on the table of contents, so let's zoom back and take a peek. Mortgage servicing rights are quite interesting. Let's check that out. Now that they have sold these loans for $11 million in profit, is there a risk that they will collect those profits? And is there some kind of guarantee here? This is really important to see whether these profits are real and collectible. Alright, let's switch gears and talk about taxes. Every company has to pay them, and Pinnacle Financial is no exception. But there's often a bit of complexity involved, so let's break it down. They note that they have to be very clear about how they calculate their tax bill. Now, what does that translate to in terms of real numbers? Their effective tax rate was 17.6%. That means that of every dollar they earned before taxes, they paid about 17 cents to the government. The legal rate is at 25%, with the benefits of municipal and community bonds reducing their liability. Always want to see this nice and low. This has to do with how employees and executives are paid. What's interesting here is that almost 700,000 shares may become available for issuance at any point. That is a lot of shares that the executives can control. The value of those shares is approximately 90s. That's also a lot of money that is being diluted to regular shareholders as they keep issuing restricted stock at $90. That's also a lot of money that is being diluted to regular shareholders as they keep issuing restricted stock. You have $140 million in income. They are setting aside some money, and they have a little bit of dilution from stock issuances. That is good because people are getting paid well. But there is some potential for a dilution. Now for our favorite risky business section. These are basically financial contracts used to hedge risks or make bets on where interest rates, etc. are going. They are hedging the interest rate risk with available for sale securities with $4 billion to receive a variable interest of SOFR. And for that, the estimated fair value, the bet that they have made, is at $40 million. These are generally used for risk management and not profit. This may impact or decrease your profit. This is very technical, but basically how they do math and account. That is important. Nothing much. Let's go on. These are the government rules and guidelines they have to follow. One thing to check always is these numbers. They must exceed certain numbers in order to operate. Here it shows that the company is well capitalized, which means they have plenty of assets compared to their debts as per regulators. Also, the bank could pay approximately $1 billion of additional dividends to Pinnacle Financial without prior approval. Seems okay. This is just the debt. This does not affect common shareholder much, so we can skip over it. Basically, Pinnacle is a single segment reporting, so nothing interesting here. Well, this concludes the filing, and we're at the forward-looking statement section, so let's actually do some forward-looking and give an assessment. So based on these numbers, what do we think? Pinnacle Financial had a solid quarter, boosting profit and managing its loans pretty well. They are not as risky as other banks and have been dealing quite well. The number that needs to be looked after is the set aside for potentially bad loans. It might get bad due to the times, or it may not. If the bank continues its current operations in an efficient, optimized and de-risked manner, they will keep on succeeding. The biggest risk that I see comes from broader economic uncertainty. If the economy takes a turn for the worse, those nice loan numbers could quickly turn sour. Overall, Pinnacle Financial seems to be steering the ship reasonably well, with consistent and solid shareholder value. That is it. Now it is time to give this video a like, subscribe for more in-depth analysis of business filings. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. Don't forget to check out the Discord in the description. See you next time.